Hello everyone and welcome to today's morning report on Monday the 22nd of February with me, Rich Perry, market analyst at Handtech Markets. European trading session got off to a very strong start, and that has come with this oil price that's rallied. Generally risk appetite is pretty much positive today. We've seen the oil price rebound about 3%, actually 3-4%. Let me just show you in early moves today. You've got the strong rebound that we've seen following on from Friday's weakness that basically unwound all of Friday's losses. So we're sort of back into a more positive mindset. Interestingly, I'll show you this Brent crude chart, which has sort of started to consolidate really on a medium term basis now. You've got the long term downtrend still, or the downtrends of 3 months actually still intact on WTI, but on Brent crude, it's sort of more of a consolidation phase, and I think that is sort of indicative of what we're seeing at the moment in these markets, whereby you're seeing sort of daily sort of volatility higher and lower. And at the moment, it seems to be that we're driving this one higher. So that has helped markets across the board. You've seen the Treasury yields pulling higher, 10-year Treasury not far from the high of the day, but the 2-year Treasury breaking out. Actually, that's well, you could even argue that's a head and shoulders reversal, so that could well drive further gains in that move. So that's a strong move that we're seeing on the 2-year Treasury. So the improvement there is driving the dollar higher. We've seen day high on the dollar. Now we're back at a key pivot point on the dollar index, and that is playing out as the euro dollar is back at key levels. And it's some very interesting moves that we're seeing today. So we are seeing some positivity through these markets. Now, the other factor is that you've also got the fear of the Brexit growing over the weekend. An influential politician in the UK called Boris Johnson, who's actually the Mayor of London, he's sort of voted he's going to be joining the Vote Leave camp, and that has certainly put the possibility of a Brexit are much higher, and cable, or at least sterling, has been sold off significantly. 1.5% on sterling today, and I'll talk you through the chart impact of that. But really strong downside move on cable as that has come through today. The euro is also under pressure, and as is the yen. But the euro has not been helped certainly by the eurozone flash PMIs coming out this morning, worse than expected for the manufacturing, services, and composite data, all missing estimates on that eurozone number. And that is putting the euro under a bit of pressure, and we're seeing some sharp moves. The gold price is the other big mover on the day, down significantly, down $24, and I'll talk you again through the impact of that in my chart appraisal in a bit. So lots going on today. You've got the flash PMI data for the US at 245, which is the main bit of data for the afternoon. So my chart today is the Kiwi dollar. Now I've show this because basically we've seen the commodity currencies just starting to find a bit of support again. Kiwi, as you can see, is basically trading within this big band, isn't it? Between 62.30 towards 69 figure. And if you sort of zoom into that, it's got almost like a pivot sort of pivot range. The support coming in at 65.60. There's been a 66.15 has also been a pivot support, but it's interesting that you haven't actually seen a close below 66.15 yet. In the last, well, sorry, you saw one close below that, but in the last 3 weeks, and that move was quickly turned around. So that would suggest, I think, there is support for the Kiwi at the moment, and the momentum indicators are pretty much sort of neutralising at the moment, because you're seeing the Kiwi sort of trading between 65.60 up towards the reaction highs at 67.50. So pretty much like 190 ticks worth of trading band at the moment, and it's sort of beginning to find a bit more support again. The risk appetite is positive today, so Kiwi's higher on the day. You're seeing this move breaking through, or looking to break through, these reaction highs that we saw sort of late last week. 66.75, you'd argue. 66.80 is that come in as the resistance just in the last couple of hours. So that is your initial line of resistance, and that is sort of still, I suppose you could argue, holding on to that resistance that we had last week. But if you see a break up above that, certainly on a closing hour basis, I'd say that pretty much reopens the range highs again. And if you did that, then you'd be looking out for 66.40, sorry, 67.40, but the main one being 67.50. So it certainly looks like the Kiwi is sort of trying to regain a bit of upside momentum. The interesting fact also will come is if the RSI starts to push above and hold above 70. I think because that is at the moment the RSI is fairly sort of indicative of a range play. And you could even argue it's slightly rolling over. Look at these stochastics again, slightly rolling over. So maybe that would suggest that the resistance coming in around that sort of 66.75, 66.80 level could well be enough to see a bit of profit taking near term. You're seeing as I said, seeing this sort of trading sideways move over the past sort of week or so, and it'd be interesting to see if that resistance at 66.80 continues to hold back and see the momentum indicators roll over. And if that were to be the case, you'd presumably play just that near-term range, wouldn't you? That near-term range between 65.60 up to 66.80. Yeah, we're still looking for this upside break above that, so you can see a retest of the range highs. But at the moment, it still is, I think, looking for the next catalyst. So I wish you good luck in your trading today on the Kiwi, and I'll speak to you later. Thank you.